Okay. What is going on, guys? Welcome to Stock Talk with Nico Criticos. Today, we're going to be doing some stock analysis on Restoration Hardware stock because this stock has now fallen over 21% today. And it's just bad numbers, bad guidance. And if you take a look at what they reported, they had EPS of $1.53, missing the analyst estimate of $2.22 by a staggering 31%. That's huge. Revenue 842 million, trailing the expected 872 million. And what else do we have? Management calls out says that the $40 million off their revenue this past quarter was mainly because of the tariffs and the bad weather, which again, tariffs are affecting a lot of companies right now. And I keep thinking at some point those are going to change, whether it's the Supreme Court or Trump or I don't know what it's going to take, but it might take a couple of years. But I think it will change at some point, and then that's going to help out a lot of companies like this. So, Restoration Hardware is a proxy for luxury home sales with interest rates remaining stubbornly high and luxury home turnover at a near 30-year low. The pool of people buying expensive couches has shrunk. Now, they are aggressively spending to expand into Europe, Paris, London, and Milan, and launch RA estates exactly when the global housing market is at a trough. This is creating a peak investment trough earning scenario that scares short term investors. And then we have their margins are down, the cost of international expansion, and the increase of costs of shipping and tariffs. The outlook for next quarter is forecasting 2 to 4% revenue decline, which is not good. And then the numbers are down, but the company actually reported 8% revenue growth for the year 2025. Then let's go back up here and take a look at what RH's moat is built on. They are brand aspirationalism and a unique physical ecosystem that is moving away from traditional retail toward a luxury gallery model. Unlike competitors who are closing physical stores, RH is expanding into massive high design galleries. This creates a destination experience that is difficult for online only players like Wayfair to replicate, and their membership model charges fees. And like I said, they're expanding into things like luxury homes, yachts, and hospitality, which is all great to really capture 100% of the luxury consumer's lifestyle. Then you look at the competition, and the competition is still not as high end as Restoration Hardware. And the other thing is Restoration Hardware is still growing, where these other players are not growing as fast. So the estimates for this year for EPS are around 5.50 to $7 EPS, which let's say they do $6 EPS. If we put the stock at a 20 times price to earnings, that's $120 stock, and that's pretty conservative for this company. If you look at where it normally trades, the PE on this the last couple years is, sometimes it goes really cheap down to like a 17, which like right now we're even cheaper than this. Right now we're probably at like a 14 or something, a 13. Well, actually, no, I think we're at a 12, right? Yeah, no, we're at an 11. It's at 11 times earnings. See, that's so cheap right now. Um, so I think a 20 or even 30 times earnings, this stock could trade at that. And when you look at Yahoo Finance estimates, it has them doing over $10 in 2 years. So I mean, I don't know. I mean, I think this stock could be a $250 stock in a year and a half from now. I mean, that's not even being that crazy, really. I mean, that's just with conservative numbers. The free cash flow yield is over 12% right now. I mean, that's crazy. You don't see any stocks that have that. Price to sales, it's 0.7. You're basically paying nothing for it. I mean, so I kind of want to make a position in this. It's just I don't know a ton about this company. I've never owned this one before, so I need to do more research. But I mean, if you're bullish on this, I can understand why. Profit margins of 3.4% are not great. And then we have ROI of 10%, which is still not great. But again, I think it's just the space, it's just the time we're in. You really have to believe that if this is a dominant player in the space, which they are, and you think the market for luxury spending is going to come back, which it most likely will, right? I mean, even if it takes 2 years or 3 years, it most likely, I mean, it will at some point, then this stock should be over $200 again. Free cash flow of 249 million. That's not that good. Net income of 124 million again. I mean, but that's why we're talking about a $2 billion company now. I mean, it's dropped so much. So part of me wants to invest in this. I don't know. Right now, I'm also invested in a lot of stocks. So I don't know if I want to add another position. But really, if I had to pick, I would say I think this stock could be a good buy. I mean, I think sometimes when stocks drop a lot like this, it takes a couple of weeks and they'll just stay flat. So it could take a couple of months before the stock is turning around, but I could see the stock easily being $200 again. I don't think that's out of the question, especially, I mean, if you look at these price targets here, I mean, they have the bear case being around $100, which is what we're at right now. So I think I don't know. I think it's just a tariff. It's a tariff problem and it's a luxury spending problem, which I think both of those things are temporary. Even if it means it's 2 or 3 years away, I think both of those things are temporary. So that is my analysis for Restoration Hardware. Let me know what you guys think down below, and I will see you in the next video.